Thank you, Mark, and hello from London. Well, not that many technical patterns developing over last week, so I think my part is going to be shorter than usual. This doesn't mean that I do not note the extraordinary patterns we've seen in, for example, LME 3-month zinc, something I had warned about might happen 13 weeks ago, or the ones we've seen in some of the energy markets. All these I deal with in greater depth in my specific daily or weekly videos. No, here I have and will deal with some new patterns started up last week, and I have to repeat, there have been few. We had a weekly key reversal down in US dollar against the Swiss franc. 3 weeks ago the market peaked and was slowly declined during the time after. It looked like last week might be a press on the accelerator in this regard, and yesterday looked like we might see the beginning of a move lower as prices dropped below the short medium moving average, currently at 92.15, and even approached the medium moving average, currently 91.76. However, later in the day prices recovered and we ended up with what could be seen as a hammer pattern. So it is not really a surprise that we've seen prices today hesitate, even start to creep higher a little bit. We also had a weekly key reversal down in US dollar Mexican peso last week. This action was more interesting as it came following the market reaching up and touching target X on Tuesday last week in the 2089.30 area. This was the initial upside target for the large June to September descending triangle. It seemed the market had just about managed to reach this target before falling away, having spent all of its ammunition on the bullish side. Well, after forming the weekly key reversal down last week, this past Monday saw a small recovery, but it was muted, and yesterday saw a strong move lower, only halting at the combination of the upper trend line of the descending triangle pattern itself, currently at 2018.46, before, well, plus the rising short medium moving average, currently 2018.40, and the very slowly rising long moving average, currently 2015.93. With all these closely assembled supports below, it's hardly surprising to see prices pausing in their decline, but it's interesting to see what happens next here. New York Sugar saw a dramatic weekly key reversal down last week as well. This was from the peak of 2061, the highest it had been since February 2017, all the way down to 1914 by last Friday. It was not entirely surprising we saw prices peak up there in the mid-20s, as we have a strong congestion band between 2010 to 21 even, dating from January to February 2017. Now, this congestion band has stymied two earlier attempts higher in August, another one in September, and now this dramatic move lower last week after reaching higher. Not only that, but the declines have continued as we have been moving through some fairly clear territory without significant supports until reaching down to the February high this year at 1894. Even then, that is not such a prominent support. Better support lies below and is rising each day. It's the combination of the April 21, 2021 uptrend, currently at 1860, and its partner now, well, since July, the rising medium moving average, currently 1859. There are far larger patterns and actions involved here than just these though, and you can hear more about them in my sugar video from Monday. Finally, last week we had a weekly key reversal up in the PHLX semi-index. Not one I speak about often, but an interesting one for our equity and stock people. This had a weekly key reversal up when prices dropped down to the long moving average below, currently at 31.88, pierced it on Tuesday last week, and the next day started rising. The major features of last week were the gaps higher between Wednesday and Thursday, and then again between Thursday and Friday. This latter gap is interesting, as it was the only one of the two that has since been filled, and it showed how the market dealt with the then overhead medium moving average resistance, currently at 33.02. This week we're gone higher still, with Monday making a dramatic move up, dramatic daily key reversal up. I suspect we may see the market reaching up towards the highs in the 34.80 area on this one, as over the last 2-3 weeks we've formed a quite nice looking, if smallish, double bottom, and the 34.80 area which is where we're looking up there, would tie in as a possible target on the top side for such a pattern. That just about covers it. So I'm always happy to share my videos, various charts, and answer any questions of anyone who is interested in that. I'll finish this section from London. Hope you found these comments useful.